Morning, Steve Freed in Chicago with the morning grain comments. Well, it's cold here in Chicago, and markets have been kind of keeping the beans in a trading range while I was gone. Corn and wheat's near the lower end of the trading range that we've seen for quite a while. As far as news is concerned, number one, looks like all the numbers for the S&Ds are about unchanged. I think that USDA is using a soybean carryout this year of 955. Range of guesses is 793 to 1028, and much of that is what's going to happen on the export side. As far as the world stocks are concerned, you've got basically 112 million tons this year in beans. Most people are there. As far as next year, people think it's going to raise to 115 million tons. Corn carryout, USDA's got 1736 for this year. Range of guesses as low as 1660, as high as 1731. And again, key there is just, will the crop get a little smaller? And then what are we going to do as far as demand is concerned? World stocks numbers, again, USDA changed all the numbers, adding some China numbers, doubling their China numbers. Most people think that the stocks numbers are around 329 million tons. USDA is at 307. Next year, they'll keep it at 312 million tons. The big spread next year between U.S. carryout for 19 and 20 is between 1630 and 1820. And again, the key there is how many acres are going to be planted and what's the final export numbers going to be. For wheat, the numbers aren't really that much different. USDA's got 949. Most people are at that number. They've got 266 million tons of world wheat stocks. Most people are at 272. Next year, they would raise it to 281. So that's one of the things that kind of limits the upside in prices. We also note that Brazil weather is going to be good for the next 10 days. They've got about 82% of the soybean crop planted versus 67 average. So two things there. Number one, they probably would be able to load boats earlier than normal in 2019. And number two, they'll be able to plant that second corn crop earlier than normal. Argentina weather, it's been wet. Their soybean plantings are about 22% done. Corn is about 36% done. I'm guessing that's about a week or maybe 10 days later than normal. So basically, we're probably going to stay in these trading ranges. You know, people are saying buy breaks, sell rallies. Outside markets, last week, the President of the United States suggested that, you know, he might look at a deal with U.S. and China. At the same time, Vice President of the United States came out and said China was a military threat to that part of Asia. So doubt if we'll see much on the November 30th meeting in Argentina, but most people think that there might be some kind of a deal in the first quarter of 2019. The critical question is, how does agricultural fit into that deal? Will the United States force China to buy beans, corn, and wheat? And will China actually even buy that with good South American crops and good world crops next year? And then we'll be watching the dollar. The dollar is at near season's highs. Will that continue? Or will we see some pressure in the dollar, whether it's because the Feds may not be raising rates as much as people think, or that the global economy may be slowing down. Crude oil need is near last year's lows. Will that continue because of too much supply? Or we find some support because of the possibility of a trade deal. So all in all, we're going to stay in these trading ranges. It's cold. It's going to remain cold. And we'll be focusing now as we move along on the November 30th meeting. We'll be focusing on year-end, what the funds want to do, what the dollar is going to do, and then we'll be watching South American weather. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.